With the new year comes a fresh batch of opportunities to set up your portfolio for upside potential. And we're uncovering which names exactly can help make some investing magic. Barbara Doran, BD8 Capital Partners CEO and CIO, joins us now. Thank you for joining us here. And I just want to get... Yes, I want us to show the Wi-Fi Interactive because you have a few picks for the next year, and we're showing the 2025 year-to-date totals, and you can see some big ones there: Nvidia, Alphabet, Broadcom, Goldman Sachs, Uber, Netflix, Gold, Boeing, Starbucks. What's the theme here, or are there a couple different themes that you like?
I think there's a bunch of different themes. Even among the technology stocks, there's clearly an AI theme. I think Nvidia and Broadcom, people keep getting spooked about overbuilding, too much capacity. It's a bubble. I don't see it. Nvidia right now is at 26 times, earnings next year, and those earnings will come up. And so I think by a lot of accounts, and I certainly believe this, that we are still in the early innings. And if you look at, for instance, the number of corporations that have yet to really integrate AI fully into their operations, we're talking single digits. A lot of people are really working with consultants, trying to understand what they need, how they implement. And so I think you're going to continue to see this happen, and you're going to see ongoing productivity increases. The other names, you have one is a turnaround. Obviously,
would that be Starbucks? All right.
Yeah, you got it. It has not done that well this year because there's always a question of timing in these things. And I think here you had Brian Nichols, the Star CEO, who came in after turning around Taco Bell and Chipotle. It was a big hire because Starbucks had lost its way, a great franchise, premium franchise, but it sort of had lost its step there. So he's putting a lot of initiatives into place, whether it's about operational efficiencies, changing the ambiance, the experience of the customer, the staffing, et cetera. But a lot of those big initiatives are not going to really bear fruit fully until this year. However, in the last quarter, we saw for the first time in almost 2 years, they had positive same-store sales. And to me, that's an indication that the turnaround is working. And at these prices, I think the risk reward is very attractive on Starbucks.
I want to talk to you about another kind of outlier here. We got GLD on your list. That is the gold ETF, and we saw gains in the precious metals. Gold was on the small side. We saw silver 150+%. What do you like about the precious metals in 2026, specifically gold?
Well, I think that for me, there's two categories. One is gold. And I think what gold is going through, gold always was the refuge in terms of if there was fears, geopolitical uncertainty, inflation. But I think what's been happening over the last few years since Russia's foreign reserves got impounded when they invaded Ukraine back in early 22, and that was I think 600 billion. A lot of other smaller central banks are saying, hey, wait a minute, we don't really want to be hostage, to foreign powers. And gold is an easy one to up in the portfolios. If you look at the percentage of gold we hold, or Germany, or some of the European countries, it's over 70%, in our foreign reserves. But other countries, it can be under 10%. So I think that is what you're seeing, is steady central bank buying, and I don't think that stops anytime soon. So I think gold, despite its big run this year, can go higher. Now, the other metals, you're talking silver, copper, aluminum, nickel. These are all things that are so important in data center build-outs. And that, as we know, is just going gangbusters. And there's lots of building to do over the next few years and probably longer. So I think the demand for that, it's almost like the supercharged commodity cycle we saw when China was just beginning to ramp up and really transition from this very rural backward economy to where they are today. So the commodity cycle was not just a typical cyclical, supply demand was critical to watch for a year or two, then it would be over. I think this has legs, and for the reasons we just discussed.
I've heard a lot of talk about a possible super cycle as well. So want to move on. Netflix only up 5% this year, but admit it has found itself in a lot of M&A drama, shall we call it that? Warner Brothers, Discovery. What do you think happens with Netflix and with some of those headlines that we've seen on the M&A front?
Yeah, Netflix is down some 30%, but I think there's probably 40% upside because these are, they have won the streaming wars. I think it's been more than M&A. In the last quarter, they disappointed in terms of subscriber growth. Churn was a bit higher than people expected, but I think that's a lot of noise because even if as growth can slow, they have so many levers to pull. They just continue to churn out new content, and really new content. I think it's over 60% of what viewers watch. And plus, if they get the library, of whether the HBO, Oh, that's 100 years of film and TV and franchises like Lord of the Rings and Harry Potter, and that would be a win-win. But people, it's hard to measure what that's going to be because they are paying a premium for that. But I think Netflix is still, I think, is down here, especially the risk reward is extremely attractive.
I want to ask you about Boeing. This is a stock, we know it had huge troubles in 2019, 2020 coming into the pandemic. It's gone basically sideways for 5 years, but it's up 20% 2025. What do you like about Boeing? Have things changed? Is it the year of the Boeing comeback?
Well, there's been a lot of false starts. I thought a year ago it was the year of the comeback, and then they kept having delays. But it looks like what we're seeing the last 4, 5, 6 months is that deliveries on some of their key planes are really ramping up. And of course, the stock was moving up nicely. Then we had a drop because a new plane has been delayed, certification, all that sort of thing. But they are actually, I think the key tell here is that they expect to have positive free cash flow next year for the first time in a long, long time. So I think with the ramp up of two critical planes, and the third one will be coming on next year, fingers crossed, but they really seem to have up their quality game with new management, et cetera. So again, the risk reward I think is attractive here.
All right, Barbara, we got to leave it there, but it has been a pleasure talking tickers with you. Thank you.
Anytime. Thank you. Happy New Year.